Understanding market regimes requires a systematic approach to quantifying price action through momentum and volatility filters. This technical breakdown explores the mechanics behind the Cardwell range analyze methodology, focusing on how specific indicators are combined to identify potential shifts in market conditions. The analysis begins by establishing a trend baseline using a simple moving average, SMA, of the source data. This creates a directional filter. Prices residing above the moving average are categorized within an uptrend, while prices below represent a downtrend. By isolating these regimes, the logic narrows the scope of investigation to the prevailing market bias. The core of the methodology utilizes the Relative Strength Index, RSI, to identify range-bound behavior within these trends. Instead of viewing the RSI as a simple overbought or oversold oscillator, it is treated as a regime confirmation tool. By defining specific upper and lower bounds, customizable for both bullish and bearish contexts, the logic ensures that the detected state aligns with institutional range expectations. To minimize false signals, the process incorporates multi-layered confirmation. The logic requires a minimum number of consecutive bars to maintain a state before a signal is validated. This regime confirmation period ensures that the detected move is not merely a momentary aberration but a sustained shift in price behavior. Furthermore, the Average Directional Index, ADX, acts as a volatility filter, effectively screening out periods of low momentum consolidation or choppy market conditions where trend-following logic typically fails. Finally, the trade tools integrated into this framework calculate average true range, ATR, based volatility envelopes. These envelopes establish mathematical zones for potential risk and reward, which can be used to study how price interacts with statistical variance. By automating the calculation of these levels, one can better analyze market structure and the distance between current price levels and identified potential volatility boundaries. Trend bias filtering, utilizing a simple moving average, ensures that analysis is performed in the direction of the macro trend, filtering out countertrend noise. RSI regime mapping, transitioning from a classic oscillator to a range-based filter, allows for the identification of specific bullish or bearish states defined by quantitative thresholds. Temporal confirmation, implementing a mandatory bar count threshold for regime validation, helps distinguish between transient volatility and meaningful trend establishment. Momentum validation, the inclusion of an ADX strength filter provides a mechanism to avoid markets characterized by low momentum, focusing analysis on trends with higher statistical significance. Volatility-adjusted levels, applying an ATR multiplier to determine potential entry and exit zones, provides a dynamic, volatility-indexed approach to mapping price structure. Warning: educational software for analytical purposes only. Trading involves significant risk.